Canada and the United States has just escalated to a dangerous new level. Canada has officially announced a 25% retaliatory tariff on nearly $30 billion worth of U.S. imports, hitting industries across the board: steel, aluminum, computers, sports equipment, and cast iron products. But this is just the beginning. In a bold move, Canada's finance minister made it clear, we will not stand by while the U.S. imposes unfair policies on our economy. Canada will fight back, dollar for dollar. The latest tariff package includes steel and aluminum, $15.6 billion, computers, sports equipment, cast iron products, $14.2 billion, total impacted U.S. imports, $29.8 billion at a 25% tariff. This is not the first time Canada has retaliated. On March 4th, in response to U.S. tariffs on Canadian steel and aluminum, Canada struck back with $30 billion in countermeasures. Now tensions are exploding. The U.S. and Canada have been top trading partners, with a two-way trade volume exceeding $725 billion per year. But today, that alliance is collapsing. Former U.S. Ambassador to Canada, James Blanchard, warned, U.S.-Canada relations are at their worst point in modern history. We were once strategic allies, but now, everything has changed. The White House is making things worse. Officials have referred to Canada as America's 51st state. The U.S. has accused Canada of decades of unfair trade practices. A top U.S. official even claimed this isn't about trade, but a war on drugs, saying that tons of illegal drugs are pouring into the U.S. from Canada. But wait. The facts say otherwise. According to U.S. Customs and Border Protection, CBP, less than 1% of seized illegal drugs actually originate from Canada. So, is the U.S. manufacturing a trade crisis to push its own agenda? Steel and aluminum. The U.S. imports $15 billion in steel and aluminum from Canada annually. These tariffs will drive up production costs, impacting industries like auto manufacturing, construction, and consumer goods. Automobile industry. 75% of auto parts produced in Canada are exported to the U.S. If supply chains break down, American car manufacturers will struggle. Agriculture and food exports. The U.S. exports billions in fruits, vegetables, and agricultural products to Canada. But with a 25% tariff, American farmers will lose market share. James Blanchard issues a stark warning. This crisis is artificial. The U.S. does not have a trade deficit with Canada. We actually have a trade surplus in manufacturing. Our deficit is in energy, a resource we desperately need. $1 trade surplus with Canada in manufacturing. But Washington's reckless trade war is now driving both economies into a downward spiral. New poll from CNN reveals 56% of Americans disapprove of how the administration is handling the economy. U.S. imports from Canada could see a 10 to 15% price increase within months. 150,000 U.S. jobs are at risk. If this trade war continues to escalate, inflation is about to get even worse. Prices on cars, electronics, and household goods will surge. American manufacturers will struggle to stay afloat. Working-class Americans will suffer the most. This is not just a political game. This will affect everyone. Washington is now considering additional tariffs on Canadian imports, a move that could be announced as early as April, but economists warn a more aggressive trade stance will backfire on the U.S. Canada will retaliate harder. The U.S. economy cannot afford a prolonged trade war. Will Washington continue down this path, or will they choose diplomacy? How far will Canada go in its next round of countermeasures? There will definitely be more surprises in the future. Don't take your eyes off the screen, because things are just getting started. University, a national scandal. Trump promised a prestigious business school. Instead, Trump University was a fraudulent scheme, leading to $25 million in lawsuit settlement after deceiving thousands of students. In 2017, Trump signed one of the biggest tax cuts in history, claiming it would create jobs and boost wages. Instead, what really happened? Corporations spent $1.1 trillion on stock buybacks, increasing CEO salaries but doing little for workers. The national deficit exploded to $3.1 trillion, the largest in U.S. history at the time. As soon as Trump left office, the market began to crash because the so-called economic growth was built on artificial inflation. Before the election, Trump made bold claims about how he would revive the American economy. But when asked recently whether a recession was coming, he simply said, "I can't guarantee anything." The reality of Trump's economic record, manufacturing jobs declined by 240,000, according to the Bureau of Labor Statistics. His trade war caused massive layoffs as businesses struggled with higher costs. Middle-class Americans paid the price, while corporate executives got richer. The economic damage from Trump's presidency is not easily reversed. The U.S. is now struggling with a record-high national deficit and unstable stock market businesses, struggling to recover weakened trade relationships with global partners. Experts warn that it could take years to recover from Trump's economic disaster. The stock market is in chaos. Prices are still rising. Businesses are barely surviving. And Trump? He's still lying. So the real question is, will Americans finally wake up? As economic instability continues, the truth is clear. The only question that remains is whether Americans will finally see through Trump's lies or repeat history. Stay tuned. The next revelations will change everything. Tariffs were meant to be a shield protecting the U.S. economy, but instead of creating an advantage, they have triggered a financial earthquake. In just one day, $4 trillion vanished from the U.S. stock market. Businesses are struggling, investors are panicking. But what exactly caused this disaster? The trade war hasn't just impacted production. It has ignited a crisis on Wall Street. Major tech giants Apple, Nvidia, and Tesla, all heavily reliant on global supply chains, became the first casualties of the sell-off. NASDAQ, the index representing the tech sector, plunged 4%, one of the sharpest declines of the year. Apple, with a market cap exceeding $2.7 trillion, saw its stock drop 6.3%, erasing over $160 billion in value in a single trading session. Nvidia, the leading AI chip producer, lost 7.8%, wiping out nearly $180 billion in market capitalization. But the hardest hit was Tesla, whose stock plummeted 9.2%, slashing $125 billion from its valuation in just one day. The sell-off didn't stop there. Microsoft, Meta, and Google also saw losses between 5 to 7%, wiping out another $350 billion in market value combined. Analysts warned that if the situation worsened, this could lead to a tech bear market, where values keep declining for months. The collapse of the tech sector rippled across the market, triggering a chain reaction of investor panic. Beyond tech, the airline industry and hedge funds were also caught in the storm. Delta Airlines, one of America's largest carriers, announced a 50% cut in profit forecasts due to rising fuel costs from Canadian tariffs. Instantly, Delta's stock plummeted 14%. Marking its worst drop in 5 years. American Airlines and United Airlines also took heavy hits, with stock prices tumbling 11.2% and 9.8%, respectively. The prolonged uncertainty led to a mass exodus from hedge funds. Major investment firms like BlackRock, Vanguard, and Citadel engaged in a massive sell-off, liquidating stocks at the fastest pace in 2 years. A staggering $240 billion was pulled out of the market in a single day, amplifying the Wall Street sell-off. This triggered a domino effect across the financial system, as investors rapidly lost confidence in the administration's economic policies. The collapse extended beyond tech and airlines, shaking the entire U.S. financial system. Major banks like J.P. Morgan Chase, Goldman Sachs, and Bank of America each saw declines exceeding 5%, driven by fears of an impending recession. The S&P 500 dropped 5.7%, marking its largest single-day loss since the 2020 pandemic. The retail sector, already under pressure from rising costs, was hit hard by tariff-induced inflation. Walmart lost 12% in value, wiping out $56 billion in market capitalization. Amazon fell 9% as consumers tightened spending amid growing recession fears. Even cryptocurrency markets, often considered a safe haven, weren't spared. Bitcoin dropped 5%, sinking to $42,000 as investors pulled out of risky assets. The entire crypto market saw over $200 billion erased in just 24 hours. The bond market also sent alarming signals. The 10-year U.S. Treasury yield fell to 4.22%, signaling that investors were fleeing stocks for safer assets. A classic sign of an approaching recession. This wasn't just a short-term market shock. It was a full-scale confidence crisis threatening the stability of the U.S. economy. A single, flawed trade policy. And $4 trillion vanished from the U.S. stock market overnight. America's economy is now fighting itself rather than its global competitors. The question remains, if $4 trillion evaporated in just one day, what happens next? U.S. markets lose $3.6 trillion. Canada strikes back. Is America backfiring on itself? Overnight, the U.S. market evaporates $3.6 trillion. Canada retaliates aggressively. American industries are in turmoil. Is this new tariff policy backfiring? U.S. raises tariffs. Trade war ignites on March 4, 2025. The U.S. administration officially enforces new tariffs, 25% on imports from Canada and Mexico, an additional 10% levy on Canadian energy. Tariffs on Chinese goods increased from 10% to 20%. Why? The U.S. government claims this move is to protect the national economy and curb illegal goods flowing from neighboring countries. But is this truly a victory? Within hours of the tariff policy taking effect, Canada strikes back. Prime Minister Justin Trudeau declares, if the U.S. imposes tariffs, Canada will retaliate immediately. And that's exactly what happened. Canada slaps a 25% tariff on $155 billion worth of U.S. goods, targeting key economic sectors. $30 billion taxed immediately, the remaining $125 billion to follow in 21 days. This is Canada's strongest trade response in history against the U.S. Canadian provinces fight back Ontario. Doug Ford. Energy retaliation 25% tariff on electricity exports to the U.S., impacting 1.5 million homes in New York, Michigan, and Minnesota. Warning, complete power cutoff if tariffs remain in place by April. Cancelled. Nova Scotia. Tim Houston. Blocking U.S. trade. Doubles toll fees for U.S. trucks crossing the province. Removes all American liquor from Nova Scotia Liquor Corporation shelves. Bans U.S. companies from bidding on government contracts. Alberta, Danielle Smith. Market diversion. Accuses the U.S. of sabotaging trade agreements. Declares reduced reliance on the U.S. expanding exports to Europe and Asia. Urges government investment in domestic military and manufacturing industries to break dependence on the U.S. Manitoba, Wabkinyu. Targeting consumer goods, bans American liquor from all Manitoba Liquor Mart stores, dealing a blow to the U.S. alcohol industry. Newfoundland and Labrador, Andrew Furey. Cutting business ties, reevaluating all procurement contracts with U.S. businesses. Shifting trade focus to Europe. Decreasing reliance on the U.S. Canada has never retaliated with such unified force before. U.S. financial markets crash. Within days of the U.S.-Canada tariff war escalating, the American financial markets collapse. Dow Jones plummets nearly 800 points, one of the biggest drops this year. S&P 500 and NASDAQ decline by 2%, entering correction territory. $3.6 trillion wiped out from the market, sending shockwaves through Wall Street. Industries hit the hardest. Automotive, Ford and GM face projected losses of $14 billion and $6 billion, respectively. Construction. The housing sector struggles with soaring costs due to taxed raw materials. Consumer goods. Americans now confront rising prices as import taxes take effect. Investors panic, shifting money into U.S. Treasury bonds for safety. This leads to lower bond yields, a classic signal of an impending economic recession. What will the U.S. do next? What will Washington do next? Will they retract tariffs to prevent further damage? Will they intensify pressure on Canada despite economic risks? Will they seek a new trade agreement? If the U.S. doesn't adjust its strategy soon, the world's leading economy may be headed for a deeper crisis than anticipated.
Today's a tough day. It's a tough day for Ontario and for Canada, just as much as it's a tough day for the United States.
Ontario scraps its contract with Starlink, banning the American company from bidding. LCBO halts U.S. liquor sales, causing a $1 billion loss. Canada slaps a 25% tariff on $155 billion worth of U.S. goods, with $30 billion taking effect immediately. Doug Ford declares readiness to cut electricity exports to the U.S.
I will do everything.
What's happening?
Including cut off their energy, with a smile on my face.
The moment the U.S. imposed new tariffs, Canada struck back with swift and decisive countermeasures. This isn't just a temporary response, it's a calculated strategy, targeting key sectors of the American economy. Ontario took the lead by scrapping its contract with Starlink and banning U.S. companies from bidding on government contracts. This move doesn't just impact the tech industry, it sets a dangerous precedent for American businesses that rely on the Canadian market. But the biggest shock came from LCBO, the world's largest liquor distributor. On the very day U.S. tariffs took effect, LCBO announced it would halt all imports of American liquor, stripping U.S. producers of one of their most important markets overnight. This decision immediately inflicted a $1 billion loss and put pressure on the entire U.S. liquor supply chain. Canada didn't stop there. It rolled out a 25% tariff package on $155 billion worth of U.S. imports, with $30 billion taking effect immediately. This hit hard on industries like agriculture, home appliances, automobiles, and technology, sectors already struggling with inflation and supply chain instability. Now, they face the added risk of losing market share in Canada. These measures aren't just a show of strength. They put American businesses in turmoil. With a major trading partner like Canada cutting ties and imposing tariffs, U.S. companies have little choice but to absorb the losses, or pressure the Trump administration for a policy shift. Meanwhile, in Canada, a surge in support for domestic products is taking hold. Consumers are actively seeking alternatives. Local businesses are ramping up production, and regional governments are calling for even tougher actions. A full-blown trade war has begun, and Canada is proving it's anything but weak. In response to Canada's fierce retaliation, the U.S. government immediately scrambled to regain control. Fox News quickly went on air, portraying America as still holding the upper hand, while White House officials reassured the public that this was merely a long-term strategy with no serious impact on the economy. But reality tells a different story. U.S. agricultural exports, wine producers, and consumer goods industries are beginning to struggle. Agricultural associations are raising concerns over plummeting sales, while tech companies like Starlink are reeling from the loss of key contracts in Canada. Meanwhile, Doug Ford continues to escalate tensions. He has declared that Ontario is ready to cut electricity exports to the U.S. if necessary, and has urged other provinces to join in the retaliation. The response was swift. American product boycotts spread rapidly, from supermarkets to the tourism industry. Economists warn that if this situation persists, the U.S. economy could suffer far more than anticipated. Rising prices, shrinking export markets, and mounting pressure from businesses are pushing America into a difficult position. Canada isn't just retaliating. It's forcing the U.S. to face real consequences. The U.S. needs Canadian oil more than ever. Trade war and Keystone XL reversal. The U.S. once claimed it didn't need Canadian oil, but now it's pushing to revive the Keystone XL pipeline. Why has Washington changed its stance? How will the trade tensions between the two nations unfold? And can Canada make the U.S. pay the price for its energy policies? The U.S. reversal on Canadian oil. Just a few years ago, the U.S. boasted about reducing its dependence on imported oil, declaring that it could produce enough energy domestically. But reality is not that simple. Over 60% of U.S. crude oil imports come from Canada, a supply that cannot be easily replaced. In fact, many refineries in Texas, Louisiana, and Illinois are designed specifically to process Canada's heavy crude, not the lighter crude produced domestically. So, what changed? With energy prices fluctuating and the US facing ever-growing fuel demands, it can no longer afford to ignore the stability of Canadian oil supply. This shift is most evident in the sudden push to revive the Keystone XL project, a 1,900-kilometer pipeline that was previously scrapped due to environmental concerns and political controversy. Donald Trump, who once dismissed the need for Canadian oil, is now backing Keystone XL, criticizing past administrations for blocking the project. But can reviving a single pipeline really solve the problem? US-Canada trade war